Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Well, those were visuals from the Global Leadership Summit, which, of course, was held on the 7th of November, which is earlier this Friday. Through the course of the day today, we will play out, the voices, the opinion that we got, both from local leaders, India sort of based leaders, and, of course, lots of global opinion as well. This is Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, good morning.
Hi, morning.
Hi, morning, folks. And so many voices, right, from the Friday event, from global investors to startup wizards to, of course, Indian entrepreneurs, policymakers, so on and so forth. And we'll keep getting those highlights. And also, we're starting at least the day with some positive news on this whole shutdown business, because we've not had, US data flow out of there. So let's see if we indeed get the US government working so we get those numbers back out.
Well, Surabhi, anything you forgot, Jeevan?
Oh, absolutely.
Was the star of the day,
Showstopper.
Marching everywhere, running along. Wow.
For those who are, that's Jeevan, basically. That's a robot. And, amazing, right? Just shows you how far technology is advanced.
Yeah.
And I think we started Bazaar with Jeevan saying...
Jeevan opened up the show.
Good morning,
yes.
hello and welcome to Bazaar. I think that was something. Okay, well, as I said, more as we go along through the course of the day in terms of opinion. But let's just start with what you need to know as we start this new sessions, right? A deal struck to reopen U.S. government? Well, at least the Senate agrees. So there is bipartisan agreement in the Senate, U.S. Senate, that the government shutdown needs to end. The Senate has agreed to fund the U.S. government till the 30th of Jan. Now, this needs to pass the House, that is the House of Representatives, and it, of course, needs to go up to the President's desk for his signature. And that is essentially when the government shutdown will end. So that is point number one. Now, U.S. stocks pulled back last week from the, there you go. So Senate has agreed, House needs to vote on it as well, and, of course, the President's signature. Remember, I think, reverberations of Mr. Mamdani's win in New York, I guess at some level also galvanizing the Republicans to, get some of this stuff going, right? And I think you will hear more, you will see more on the fiscal side. We'll talk about this as we go along. Now, U.S. stocks pulled back from last week. S&P was down about 1.6%, but it basically held on to the 50-day moving average. The NASDAQ was down 3% last week. It's the biggest weekly pullback since the Liberation Day week. So that was quite something. Just consider this. And I think this is going to be the test for the US. Microsoft is on an 8-day losing streak. It's the longest losing streak for Microsoft since 2011. Meta is now up only 5% on the year. Right? I mean, Meta, by the way, for the same period, that is YTD, has seen about 10% earnings revisions. Stocks up just 5%. You look at NVIDIA. NVIDIA has lost $500 billion in market capitalization last week, more than any other stock in the S&P 500. So, and this is the mega cap IT sort of tech AI-led juggernauts which have done so well and which have held up U.S. markets. I must say, and a bunch of factors around this, right? I mean, AI, growing AI skepticism. What is the return on invested capital going to be? Growth concerns, a less accommodative Fed, etc. at play. Remember, we got that sense from the FOMC that the next cut in December is not a given. But despite all this, just look at the earnings, how earnings are tracking in the US from companies which are reporting for the quarter. It's the strongest quarterly earnings season, broad-based, since 2021. So, corporate America is firing on all cylinders, and it's not just these 7 companies. So I think, you get this wobble once in a while that, well, is this it, etc. And maybe rightfully so. Naren, for example, Naren, who is the CIO of ICICI Pru, expressed that view, saying, well, the big risk for India is not local, but is global. This AI bubble bursting, as he put it. But are we there yet is the question. And to that, I mean, just one more point that, and I think it's a relevant point, that broader growth, corporate growth is looking pretty solid. Okay, now U.S. Supreme Court sounded skeptical of the Trump emergency tariffs last Wednesday's hearings. Remember, the oral arguments had opened. The takeaway is that President Trump essentially said that he will not announce new tariffs while the Supreme Court in the U.S. is the verdict is pending. So, bit of a reprieve during this period. We don't know when the Supreme Court will finally come out and say what it wants to say. The odds have shifted in terms of what the market is expecting. Market is now saying, well, maybe the court will say these are illegal, is leaning towards that. And that is a big difference compared to from when the case started in the court. Goldman Sachs has upgraded India, and we'll talk more about this after its downgrade in October 2024. We've had a big downgrade. I mean, the reasons are pretty much the same, big underpositioning, tax cuts, rate cuts, etc., etc. We all know that. But this is a big global bank which has changed its view after they downgraded the market here, say around the same time last year. Just to tie in the levels here, Nifty broke the September highs on the downside, which is 25,448. This is the level we put out on Thursday. On Friday, intraday, we broke through it on the downside, but closed above it. So 25,448 is the first level. Below that is 25,400, 399 to be precise. It's the 40-day exponential moving average. So we'll see what happens. Bank Nifty, it tested and closed above the 20-day moving average, which is 57,578. The 40-day on the Nifty Bank is still about 200 points lower. We'll sort of work around it if we near those levels. So those are numbers up on your screen. Gift Nifty will give you a quick sense of how we are likely to start, and then we will pick it up from there. 35 points higher. F&O positioning, how are we set up? Nigel is standing by with exactly that. Nigel, over to you.
Well, I'll tell you what, the markets have seen a little bit of a correction from the recent peak, but more than a runaway rally, you know what I would want the markets to do? Just consolidate. Stop falling. That will be the first trigger for it to start moving up. And I say this because the FI short positioning has gone up by more than 50% since the start of the series. So what you require is the markets to stop falling, then these short positions get a little bit nervous. What we have been seeing is the markets have been coming down and the FI shorts have been increasing. Moving to the client positioning, well, they as well have gone ahead and they have added some long positions. So this combination of FI net short and client net long, it's good. But for that, the markets need to stop falling first. The Nifty needs to hold its ground, this 25,500, maybe move in that band, 25,500 on 25,600 or thereabouts. Even in stock futures, there was some short positioning that was created by the FIIs. Well, moving to the options data, there's some encouraging signs coming out there because there were puts that were written. Close to around 2 puts were written for every 1 call. That's on the FI stable itself. And there were options that were fairly active as well. What you have observed in the last few days is even the puts, if you're writing puts, you're seeing that, in fact, the premium has been going down. If you're buying puts, you're not making any money. And that's exactly what happened in Friday's trading session because the premium on the 25,400 put, it didn't go up, though you got the direction right. On the upside, though, the 25,500 call, well, that's seen a good amount of open interest build up with the premium around 100 rupees. So just looking at the options data, looking at the technical levels, well, the key data points for the day come up for you on the screen. So Friday's low, important. You don't want it to break on the downside, 25,300 odd. And on the upside, the 20 DMA becomes extremely important. The Nifty Bank, well, that's the one that led the fight back in Friday's trading session. I'll tell you what, that one needs to defend this 20 DMA. Intraday, it went ahead and it breached it in Friday's trading session, but there was a good recovery from there on. So the 20 DMA needs to hold out for the Nifty Bank, and on the upside for the Nifty, it needs to get past the 20 DMA. But as I said earlier, shots are getting piled into the system. Market needs to stop falling. That will be enough trigger for for the markets to see a bit of a pop. Some bit of consolidation will be par for the course.
Okay, well, absolutely. By the way, if we look at the picture across Asia this morning, it continues to be fairly mixed given the concerns around the US tech sell-off. So the other piece of news is that at the consumer level, inflation is finally positive in China, but at the producer level, it continues to be in negative territory for this is the third year in a row, the latest numbers that have come in this morning. That's the picture. So Hong Kong markets are shrugging it off more or less along expected lines, 0.5% up on Hang Seng. Taiwan's also slightly higher. And if we look at some of the other regional markets, then again, it's a fairly mixed picture as we see across the region. Now, on that note, let's look at what the implied open is telling us. We'll probably have a mild positive start. The question is, can the bulls really build on it? Because that's where bulls have faltered all throughout last week. So we'll talk about this as we go forward. For the time being, let's get to that really bullish call that Goldman Sachs has put out on India equities. Sunil Kaul of GS says that they have upgraded India to overweight, reversing the October 2024 downgrade. He expects the growth revival to be driven by supportive monetary and fiscal policies, RBI rate cuts, and improved liquidity. He also expects the corporate profit growth to rise from 10% in 2025 to 14% in 2026. And this, he says, would be led by financials, defense, consumer, and the tech sector. Goldman Sachs' key themes include mass consumption revival, self-sufficiency, new economy, and high growth pockets. That's a bullish note to start the week. Goldman upgrading India.